Hello from OtetView Markets. This is Ahura, and I will be here with you to have a short outlook and short review on the week ahead, which is going to be the 43rd week of 2024. That last week started with first. Let's check the data that we had last week, and then we can see the week ahead and check the charts. Last week started with the Chinese data. Inflation in China missed the expectation with staying stable at the 0% on the monthly front in September. On the annual front, and the annual scale, inflation in China fell by increased only 4%, and producer inflation fell 2.8%. That was that's still confirming that the demand still is the main concern in the Chinese economy, the Chinese government, the Chinese central bank, trying hardly to increase to give some more stimulus, to bring some packages, to encourage the consumer spending the money. But seems that still the consumers probably they are not happy, but they do not have actually the kind of the better outlook about the economy, so they are not encouraging to spend the money, so that will bring the demand so low, and lower demand causing the lower inflation, the falling inflation shortly. Later in China, we had other data as well, like export and import data. Chinese export increased by only 2.8%, much lower than 8.7% printed in July. In September, import also increased only 0.3%. That shows that the Chinese domestic market and foreign markets both they are facing with the challenge, the demand challenge. So the both import and export fell very deep. So that's still confirming that the Chinese economy still need more support, which we had before the Chinese holiday, the biggest ever stimulus package that we had, but still there is no more information about them. So the market, they are somehow disappointed about the stimulus package that the Chinese government already announced about that. Week ahead also we'll have so many data. We'll talk about the China. But last week, generally, as I mentioned previous week as well, we didn't have too much data from the United States. Mostly the data that we had, the information that we had, they came from speeches that we had. The main of them they were from the speeches and the speakers that we had, but still we had many other some data, some like retail sales that showed the retail sales in the United States increased by 4% and 0.4% actually monthly. And annually, the retail sales annually increased by, where the hell is that? Retail sales this is the monthly 0.4%, and the core retail sales increased by 0.5% monthly. And annually also we had a very good positive data in the retail sales. The numbers here are just missing the data numbers here, not in the chart. But on the other hand, the industrial production, they missed the expectation, and industrial production fell by 0.3%. This falling the industrial production, confirming the ongoing problems and ongoing challenges in the production sector. However, on the labor market, initial jobless claims on Thursday increased only 241K, which was in line with market expectation, but lower than 260K that we had the week before that. Generally, the data from United States, they were positive. In general, if we look at that, the labor market as well, the labor market in retail, they are positive. They show that the still economy in the United States moving forward. But on the other hand, in Europe, we had inflation numbers in generally in Eurozone, in United Kingdom, also out of the Eurozone in Europe. The data shows that the inflation is falling sharply by 1.7% in both Eurozone and United Kingdom as well. That caused the Eurozone, European Central Bank to cut the rates by 25 basis points, which was in line with expectations. In that was generally what's happening in the economic calendar, but the geopolitical front also we had a very busy week with the Hamas leader killed by Israeli Sinwar, Yahya Sinwar killed by Israeli, which increased the tensions in the middle, can increase the tensions actually in the Middle East in the next days. On the other hand, we know that Israel is planning still its very commitment to attack Iran in response to Iranian attack that they had 2 weeks ago. But still, it's the holidays. It's the holidays that we had the last week. Also, these holidays can continue. The religious holidays can continue next week as well. So that's why the economicians actually, not actually, the politicians actually, they expect the Israeli attack to happen after ending these religious holidays that they will have in the next week. Still in the next week, which is continuing after they had the last week as well. Week ahead, actually, looking forward in a week ahead from the economic calendar, if you look from the economic front, we have too many small data that together they will be very important. On Monday, we will start the week with the Chinese Central Bank meeting, People Bank of China. The People Bank is expected to cut the rates by 10 or 15 basis points, most probably. There is a doubt on that, but still the market's expecting for that because the Chinese economy still need for that. But on the other hand, the bad loans and the government's loans, the debts that the government debt that they had, all of them, they are kind of the risks that the central banks and the Chinese banks can cut the rates more and give more money in the market, inject more cash in the market or not. That's the question. But that's the market expectation to see that the rate cut by 10 or 15 basis points probably on Monday. In the United States, we will start the week with the ALI number. Probably it's going to be the minus 0.3 or minus 0.4%. It's almost 2 years that we can see the ALI on our zero level in the negative area, negative territory. We do expect that ALI number to slightly improve from the 2025 when the central bank already started to cut the rates by more and bigger numbers. But now these numbers still, unlike the other economic data that are confirming United States economies, find these numbers still showing more concerns. AI number shows more concerns about the economy and the risk of that. On Tuesday, week will continue with more speeches from the United States Central Bank in one hand, and on the other hand with the BRICS summit in Russia. BRICS is the summit is going to be happening in Russia among the countries Brazil, Russia, India, China, and South Africa, which started with these countries, and now the Islamic Republic of Iran, Emirates, and some other countries, more other countries, they're kind of this unit. But the BRICS is going to start this week on Tuesday. Will be very important. We have to follow the BRICS since Tuesday because two members of this BRICS, including the Russia and Islamic Republic of Iran, they are already involved in a war. And so the two members of this small unit, actually small by the number of the countries, but the number of population, they're the biggest units ever that we have generally after United Nations. So this will be very, very important. As I told, we have so many other speeches as well from the European Central Bank, from the US Central Bank that we have to watch. On Wednesday, the most important data that we have the most important event that we have to watch is the Canadian Central Bank meeting. BOC most probably will cut the rates by 50 basis points as it is expected after 50 basis point rate cut that we had in the United States. Inflation is 1.6% in Canada. That's while we have more weaker economic data as well. So the Canadian Central Bank most probably will cut their rates by 50 basis points to support the economy. Beige book will be published on Wednesday, which is very important to be followed after, and day after that, we will have the PMI numbers from the most developed and developing economies, including China, including Japan, European countries, Eurozone, British, and United States. These numbers must be confirmed that in Europe they have to confirm in Eurozone that still European economy is facing more challenges. In Britain after 2 months of weaker number, we are expecting a slightly positive data from the purchasing managers index in both service sector and manufacturing sector. In the United States, service sector should be fine, manufacturing sector under 50. Expansion level slightly will improve, but it will be still under expansion levels. In United States, we will have a new home sales and permits, house permits on Thursday. Permits most probably will see some, both permits and new home sales, both of them, they will see some pressure and weaker number, most probably. So with these numbers, we can say that we have a mixed numbers. But while we're expecting to see lower rates in the next months, both new home sales and the permits, they can construction permits, they can improve in the next months. Do not forget also that it's the winter times. We are getting closer to the winter, and during these months, usually November, December, January, we have less construction projects. So the lower permits is something usual. Shouldn't be the surprise. On Friday, the most important data which we're going to have is the Canadian housing markets data, but still United States durable goods orders will be the most important that we have to watch. Durable goods are the goods that you're using, that the consumer, they will use that for at least 3 years and more. Excluding transportation and aircrafts, we are expecting to see 0.1% increase after 0.5% was that we had last month. But generally, the headline supposed to fall by 0.9%, almost 1%. Generally, weaker orders in Boeing orders that we had last month, most probably we can cause a little bit pressure on this index. But generally, if you look at the general fund since 2004 and 2024 so far till now, we can say that the durable goods orders, they were fine, and they're confirming the retail sales as well. I mean, the positive numbers that we have generally in the retail sales. This is generally what we will have in the next week. If we look at the charts, if you look their effects on the charts, we can start checking the charts with the US dollar index. The dollar index increased above 103.44, which we were expecting. We were talking about at the last week in the weekly outlook that we had, reaching this number with the economic data that we had, and we are going to have in a week ahead, and also the expectations from the central bank. Most probably that can be the end of the uptrend for now, but the downtrend, we shouldn't give the credit to the downtrend, but some correction, we can count on some correction. On the gold front, there is a very clear story that we had in the recent months. We were talking about the uptrend in the gold market. Still, it can be positive. We can see some possible correction during these numbers, but still the general outlook for the gold still positive, and especially with the higher risks in the market. On the oil front and energy front, generally the Israeli commitment to the United States not to attacking on the Iranian refineries and the oil sector, that caused pressure on the oil price, which was increasing because of these tensions on one hand. And on the other hand, the Chinese weaker than expected GDP growth in IEA and OPEC monthly report that they are expecting now the lower demand for 2025. These data altogether, they caused the pressure on the oil price on Friday especially. But since the general geopolitical tensions are still high, we cannot give more credit to burst in next days. So almost probably will recover above $70 for the weekend. On the stock markets, if we look at the stock market as I talked and mentioned this week, and the week ahead in 43 and 44th week of this year, because of earnings reports that we had and we are going to have, which they're mostly expected to be the positive data. Most probably we'll see still the positive reaction in the stock market. S&P 500 can turn to the downtrend only if currently with the current numbers, only if it fall under 5,670 or $80. But above these numbers, still the bulls can continue their rip, but slightly. Light bull run. It's not going to be just like fast increasing. On the cryptocurrency side, getting closer to the US election with more chance of Donald Trump winning, which is promised more friendly laws and the leaders to the crypto market. That can be the positive kind of emotion in the stock in the crypto market and support the cryptocurrencies market and BTC price in one hand. On the other hand, generally the positive economic data that we had from United States and somehow avoiding the soft landing, which was expected still, that will also be another reason to be the positive about the BTC price, Bitcoin price. As mentioned last week, above 60K, the bulls still have power to continue. Now the 60K changed to 64K. Now above 64K, we're going to see the uptrend, but falling under 64K can cause some doubts about the continuing of the trend or not. This is generally what we had in the market and what we are expecting from the week ahead. If you had any other question, do not hesitate to write in the comment section. I will try to get back to you as soon as possible. Have a good time. Bye-bye.